Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. Okay, you've got the daily chart here, and what we've got is multi-day resistance at the 20-day simple moving average in the middle Bollinger Band, which is the midpoint between these two yellow lines, the upper band and the lower band, and that represents two standard deviations of price. So most of price happens between these two bands. The green line, the 20-day, the midpoint for me is and has been for a decade or more. It's the dividing line between, and it answers the baseline question of, are we buy dips or are we sell rallies? And as long as we're below this green line, we are in rally sell mode. So as we go to the hourly chart here, you can see we spent about 4 hours trying to get through this yesterday, and they pushed down nicely. So you can see a series of pops, sold, pop, sold, coming up, and they're trying to bring it back down. Now, here's the problem with these sell-offs, quote-unquote sell-offs. They're not going anywhere, and they're creating higher lows. So you can see, since 37.20 you can see a series of higher lows. That's not good if you're a bear. I mean, unless this is some glorified big old bear flag, and they'll try to get you all excited about that crap, and then they're going to break it down. Well, that's nice. They've only been looking for that pattern for, 20 years. What is more likely is that, tick tock, bears, clock's ticking. You got to convert that 20. Because if you don't, then we're going to go deal with 3,900, which had been resistance. But they've got to get through this area. Every time they let them come back up and print another higher high, it's more and more likely that they're going to convert the 20-day and make a run at 3,900. If the bears want to get started back down towards that 37.20 area, the genesis of that would be to take out the prior day low. So that would be here, the overnight low, 37.96 quarter, which they were trying to, they keep holding at weekly pivot. They keep holding at the 50. If the rest of the week ends up being a battle between the 50-day and the 20-day, I mean, there's some nice trading in there. I mean, yesterday was a really solid trading day for a Monday. For as whippy and choppy as it could have been, it was a very solid trading day, and a day that we were able to get through pretty quickly in the morning. And it was a little choppy midday, and then had a couple of really nice trades in the afternoon that ran farther than I expected. We shorted up in the 74-75 area against here, and I didn't really think it was going to do all that, but it did, and then they blew it. So that ended up being two trades. It was the first move down, then the rejection, and then we had another one from 49 quarter that we held into Globex, and they couldn't convert. They couldn't convert those mid-20s, and that's a problem. So right now, it's kind of a pox on both their houses. The bulls can't deal with the 20-day. The bears can't deal with the 50-day. And in between, you've got a great big, basically a 50 to 60 handle trading range, depending on how you want to carve it up. And until this chunk of price gets decided, that's going to continue today. I would expect off the open, I would expect them to pull it back. The volume weighted average price is right where the market opened at 9:30 yesterday at 38.48. You've got 46, 47 is your hourly mid-band. They're down to the 9-day at 34, and incorporate the whole bottom of that range as a place for a morning dip, something that gets bought in the first hour or so. And then the question is really going to be, what do they do with it? If they take out the Globex high with it, then I think you certainly get a test of the green line here. You get a test of the 20-day. And then that has to be the beginning for the bulls. That can't be where they run out of gas. That has to be where they find their feet. Inversely, if we sell off and we start to break the 50 and they bring it down from 38.60 down into these low 20s, that has to be where the bears find their feet, not where they run out of gas. So until there's some conviction at the edges of this range, you're going to get more of the same. So we'll see. Our Our proprietary moving average this morning is 58. As I mentioned, volume weighted average price is 48. And we're in a trading range. Plenty of elbow room to get work done, but it's a trading range. And until it decides what it wants to do with respect to some of these big key prices in here, we're going to continue to chop. All right. Everybody have a fantastic day. Be safe. Be healthy. Take care. Come trade this stuff with us. Trade them well. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.